You're sitting at a red light right now, and somewhere within 2 miles of where you are sitting, there's a guy in an $87,000 pickup truck. He has never towed anything in his life. The bed of that truck has carried exactly 3 things in the last year: a bag of mulch from Home Depot, his kid's bicycle, and a flat-screen TV he bought on Black Friday. And he is paying $1,400 a month for the privilege. Here's the part that is going to make you genuinely angry. He thinks he is being practical. My name is Smith, and today I'm going to show you the exact dollar amount that ego costs in America, because somewhere between 2015 and right now, millions of Americans convinced themselves that masculinity could be purchased through a monthly payment. And the math behind that decision is so catastrophically bad, it makes buying lottery tickets look like a sound retirement strategy. Stay with me, because by the end of this video, you are either going to make a very different decision, or you're going to finally understand why your budget never works no matter how hard you try. Let me paint you a picture first. The average new pickup truck in America right now costs $62,000. Not the fancy one, the average one. If you want the one that makes you feel like you own a ranch, the King Ranch, the Laramie Longhorn, the Platinum, you are looking at $75,000 to $95,000. For context, the median household income in America is $84,000 a year. You are financing a vehicle that costs more than your entire family earns in 12 months. And the dealership is sitting across from you showing you one number, just one. The monthly payment, $1,247 per month, stretched over 84 months. That is 7 years. You will be making payments on this truck for longer than the average American marriage lasts. But here's where it gets interesting, because $1,247 is not what this truck actually costs you every month. That is just where the bleeding starts. Let me show you what this truck actually costs, and I mean actually, every dollar, every month. Your payment, $1,247. Now, let us add fuel. Your truck gets about 15 miles per gallon in mixed driving. A Honda Accord gets 35 miles per gallon. At 15,000 miles per year and gas at $3.50 a gallon, your truck costs you $3,500 annually in fuel. The sedan costs $1,500. That is $167 extra per month just because you wanted to sit 6 inches higher than everyone else on the road. Insurance. Now I know what you have heard. Trucks are cheaper to insure. And for basic liability, sure, but you are not insuring a work truck. You are insuring a $90,000 luxury asset. If you total that truck, the bank loses $90,000. That replacement cost spikes your collision and comprehensive premiums. That is an extra $70 per month minimum compared to a normal car. Tires, those massive all-terrain tires that look incredible on pavement, which is the only surface you drive on, cost $1,500 to $2,000 for a full replacement set. You will need that every 45,000 miles. A sedan replacement runs $600. Amortized properly, that is another $65 per month. Maintenance, bigger vehicle, bigger everything. Oil changes cost more. Brake jobs cost more because the rotors are massive. Add $100 per month compared to a normal car. Registration and property taxes. Many states tax vehicles based on value. On a $90,000 truck, your annual registration can hit $800 to $1,200 depending on where you live. That is $85 per month. Are you writing this down? Truck payment, $1,247. Extra fuel, $167. Extra insurance, $70. Extra tires, $65. Extra maintenance, $100. Extra registration, $85. Your total monthly cost of truck ownership, $1,734. And we've not even touched the interest yet. You finance this truck at 7.2% because rates are not what they used to be. Over 84 months, you're not just paying $90,000. You are paying $104,748. That extra $14,748 is pure interest, money you handed to a bank for the privilege of borrowing money to buy something that is losing value every single day. Now compare that to the alternative. A 3-year-old Toyota Camry, $28,000 out the door. Payment, $450. Insurance, $180. Gas, $125. Maintenance, minimal. Total monthly cost, roughly $850. The difference between driving the truck and driving the sedan, $884 per month, $10,608 per year. Over the 7 years you are paying off that truck, you will spend $74,256 more than the person driving the Camry. That is not fuzzy math. That is not an exaggeration. That is the actual cost of needing to feel like you could theoretically tow a boat you do not own to a lake you never visit. But here's where it gets genuinely painful. You are not just spending $74,256 extra. You are losing every dollar of investment return on that money too. If you had taken that $884 per month difference and put it into a boring S&P 500 index fund averaging 8% returns, after 7 years you would have $97,000. $97,000. You could buy the lake house. You could buy the boat. You could actually become the person you are pretending to be when you drive that truck. Instead, you are sitting in traffic burning premium fuel making payments on a vehicle that lost $15,000 in value the moment you signed the paperwork. And none of this accounts for the psychological weight. The stress of knowing that one job loss, one medical bill, one transmission failure, and you cannot make that $1,734 monthly payment. You are not driving a truck. You are driving a financial anxiety machine with all-terrain tires and a heated steering wheel. Here is what nobody tells you about an expensive truck payment. It does not just hurt your bank account. It warps your entire financial life like a black hole warps space. Every single decision you make for the next 7 years gets filtered through the reality of that $1,734 monthly obligation. First, the house you cannot buy. Mortgage lenders look at something called your debt-to-income ratio. They want your total monthly debt payments under 43% of your gross income. That truck payment alone eats 24% of an $85,000 salary before you even think about a mortgage. You just locked yourself out of buying a $350,000 house because you needed to look rugged in the Starbucks drive-thru. Second, the vacation you cannot take. Your friends are planning a week in Colorado. Flights are $400. The Airbnb split is $300. Lyft tickets are $500. Total, $1,200. You look at your bank account. You just made the truck payment. You have $600 until Friday. You tell them you are too busy with work. They go without you. You stay home and wash the truck in your driveway, convincing yourself that detailing the paint is basically a hobby. Third, the emergency fund that never gets built. Financial advisors say you need 6 months of expenses saved. For you, that is around $18,000. But after the truck payment, insurance, rent, student loans, and groceries, you have maybe $200 left each month. At that rate, it will take you 7.5 years to build that emergency fund. Which means for 7.5 years, you are one unexpected expense away from a credit card spiral. Fourth, the credit card debt you accumulate because of the truck. New work boots, $400 on the Visa. Your buddy's out-of-state wedding, hotel on the card. Christmas with nothing saved, $800 on the card. Within 2 years, you are carrying a $6,000 balance at 23% interest. You are paying $115 a month in pure interest. Money that disappears into nothing. You are paying a bank for the privilege of having bought things in the past. Fifth, and this one is the one nobody talks about. The truck handcuffs you to your job. You cannot quit the job you hate because you need that paycheck for the truck. You cannot negotiate aggressively for a raise because you are terrified of getting fired. You cannot take the business risk or the career pivot because you have a $1,734 monthly obligation that does not care about your dreams. That $90,000 status symbol just turned you into a financial hostage. And the truly twisted part, the truck does not even make you happy after month 3. There is a psychological phenomenon called hedonic adaptation. You get used to anything. That first week, climbing into the cab felt incredible. You felt successful. You felt powerful. By week 12, it is just your car. The thrill is completely gone. But the payment, that is forever. You traded permanent financial stress for 3 months of temporary satisfaction. Let me run a thought experiment. 2 versions of you. 2 parallel universes. Universe A. You bought the $90,000 truck. You are making payments. You are stressed about money. You are stuck in your current job. You cannot take risks. You cannot travel. You are watching your friends move forward while you detail your truck every Saturday morning, telling yourself it is an investment. Universe B. You bought the $28,000 Camry and invested the $884 monthly difference. After 7 years. Universe A. You own a truck worth maybe $45,000 and have zero savings. Universe B. You own a car worth $12,000 and have $97,000 in investments. Which version of you is actually winning? Not the one with the better-looking vehicle in the driveway. The one with options. The one who can quit the bad job, take the vacation, start the business, help his kids with college, sleep at night without checking his bank account balance at 2 a.m. Now let me kill two arguments I know you're already making in your head. Argument 1. But I actually use my truck. If you are genuinely using your truck's capabilities every single week, hauling materials, towing equipment, working job sites, then fine. You are buying a tool and the tool matches the job. That is a legitimate purchase. But be brutally honest with yourself right now. How many times in the last 6 months did you actually use the bed of that truck for something a sedan could not have handled? How many times did you actually go off-road? Most truck owners use the bed 6 times a year maximum. You could rent a pickup truck from Home Depot for $19.99 per hour every single time you actually needed one, and save $70,000 over 7 years. You are not buying utility, you are buying a costume. Argument 2. But trucks hold their value better. Yes, trucks depreciate slower than sedans in percentage terms. A truck might lose 40% of its value in 5 years, while a sedan loses 55%. But you're starting from $90,000 versus $28,000. That truck lost $36,000 in absolute value. The sedan lost $15,400 in absolute value. You still lost $20,000 more on the truck, in real money, in actual dollars. Percentage depreciation is a meaningless stat when the absolute dollar loss is double. The auto industry has spent billions of dollars convincing American men that truck ownership is connected to masculinity, to competence, to being a man who is ready for anything. They show trucks conquering mountains covered in mud. They do not show the reality. A guy in business casual sitting alone in traffic listening to a podcast while making a payment that is destroying his net worth. So what do you actually do? If you already own the truck and you are struggling, sell it. I do not care if you are upside down on the loan. I do not care if it feels like admitting defeat. You are not going to captain a sinking ship just to protect your pride. Take the financial hit now. Buy something reasonable. Stop the bleeding. Yes, you will lose money on the sale, but you will lose far less money than if you keep making payments for another 5 years. If you do not own the truck yet, I am about to save you $74,000 and 7 years of stress. Do not buy it. Walk into a dealership looking for the most boring, reliable vehicle you can find. A Honda Accord, a Toyota Camry, a Mazda 6. Buy it used. 3 years old. Finance it for 36 months maximum. Not 84. Your payment drops from $1,247 to around $450. That is $800 a month you just gave back to yourself. Now, do something smart with it. Invest $500 of it every month into a boring index fund. Spend the other $300 on things that actually improve your quality of life. Take the trip, buy the nice dinner, get the gym membership. The difference is these purchases do not come with a 7-year anchor attached to your ankle. And when your buddy pulls up in his brand new Tundra and makes a comment about your car, you smile, because you know something he does not. You know that his monthly payment is more than your first apartment rent used to be. You know that he is one transmission failure away from a credit card spiral. You know that in 5 years you will have options, and he will have a depreciating truck and a payment book. Here's the bottom line. The auto industry has built an empire on one simple trick. They weaponized your insecurity and turned it into monthly payments. They convinced an entire generation of American men that the vehicle you drive determines the man you are. It is brilliant marketing. It is also complete fiction. Your grandfather probably drove a station wagon and built his own house with his hands. The vehicle in your driveway has absolutely nothing to do with your capability. It has everything to do with your financial literacy. Real strength is not the truck. Real strength is looking at the numbers clearly. admitting you have been sold a beautifully designed lie, and choosing the path that actually builds wealth instead of the one that just looks good on Instagram. You do not need the truck. What you actually need is margin in your budget, options in your career, the ability to sleep at night without running math in your head at 2 a.m. The boring sedan gives you that. The $90,000 truck takes it away. So the next time you're sitting in that dealership and the salesperson is walking you through the heated seats and the panoramic sunroof and the 17 cup holders, remember this. They are not selling you a vehicle. They are selling you a financial prison with really nice leather upholstery. The math is clear. The truck is the trap. The Camry is the weapon. And the only person who figures that out is the one willing to be honest enough to run the numbers. If this video changed how you think, hit that like button. It genuinely helps more people find this before they make a $74,000 mistake. Subscribe if you want more videos that show you exactly how money really works. And drop a comment below. What are you currently driving and what is your monthly payment? No judgment. I genuinely want to know. See you in the next one.